Okay, okay, I'm going to start. Hi, I'm Laura Martin. This session is on Wall Street. And so we're going to do a deep dive into Wall Street's point of view. And we're going to use big tech and we're going to use media stocks, which is my coverage universe, to talk about sort of some of the core Wall Street beliefs. I have 30 minutes. I'm going to use about 10 to talk, and then I'm going to take Q&A, try to give TPI back some time, get back on schedule. But I'm really interested in your questions. If you put it into Slido, I guarantee I'll answer it, but I'm going to give preference to people who raise their hand in the room, because you probably noticed I sit in the front row and ask hard questions. I think turnabout is fair play. So feel free to, in person, ask me hard questions. I will answer them. Okay, so let's talk about, okay, can you forward the slide, please? Thank you. Okay, nope, this is slide 2. Go back one. There we go. So the first thing I need to do is set what my seat is. My seat is very narrow, and I'm going to use Wall Street. I'm going to speak for all of Wall Street, and you'll know when it's in my world. When we have an opinion, we don't say my view. We just assume you know it's in my view. So it's a bubble. I want to propose a controversial point of view that we aren't in bubbles. You guys say you're in bubble. Wall Street says we're in a bubble. I would call it a cult. It is not a bubble. It is a cult. We have an underlying set of assumptions. We have Bibles that are different. We have jargon that is different. So I'm going to argue Wall Street has a cult. It overlaps a little with the cult of DC, but actually not that much, having sat through the last 24 hours. But okay, our cult is to focus on money, numbers, data, and valuations. When I listen to a person in this conference put together 5 sentences without a number, I am deeply skeptical. I'm like, if he doesn't have a number to support his point of view, that must be bad. So today, when I'm talking, I can't make that adjustment fast enough. I will have a number in almost every sentence because data is sort of our default mechanism, as are accounting statements. Let's talk about what Wall Street is. Let's start with Socrates. What are we defining? Wall Street's part of an ecosystem. It is only public markets. It is public equity markets, which are 50 trillion, plus public bond markets, which are 50 trillion. Together, that's 100 trillion. The US GDP is 27 trillion. So it is 4 times bigger than the annual GDP of America. Okay, it is not venture capital, which is only 350 billion, tiny. It is not private equity, which is 350 billion, tiny. It is only the public markets. To be in the public markets, to come public, you must have about $100 million of revenue, which means you have accounting systems that work, you have an HR person, you have an investor relations person that handles people like me. Like, you've got your shit together to come public. In the private sector of this ecosystem, how many people here have ever invested in a friends and family round? Right, okay. That's not part of Wall Street, but you know, that's one of the great things about America. We have a friends and family round, then we have a Series A, Series B, Series D, and then usually Series C and D are usually venture capital backed, typically. It means they're getting their act together, they're getting a product that works, but Wall Street is the end and the public markets only of this really wonderful, let me call it financing ecosystem that America has. Okay, deliverable. We have a single deliverable. It is not confusing. It is not dispersed. It is direct. What if I give you $1 of capital, CEO, what are you giving me back? So we're allocating capital, the highest return capital business, and our Bible is the income statement and the cash flow statement, a little bit the balance sheet, but really those are our, and if a CEO says, we're great, I want to see it in sales, or I don't believe you, right? So like the money talks, like much louder than words in my world. Time frame's 1 year. Okay, so this is hard. Why 1 year? Because of the way people get paid. Professional money managers always are compensated against a benchmark, the S&P 500, the media index, some index. If they don't perform in the first year, they get a warning. If they don't perform in a second year, they lose their job. Why? Because everyone in this room, when you're talking to your account manager, if they're underperforming the S&P index, you should fire your active manager and go invest in the S&P index. Money moves. People get paid on how money moves. And so they're getting there. If you're an active manager, you're making 1 or 2% from your clients. If you're not outperforming the benchmark, there's no reason they should keep money with you. So that 1 year time frame is really important in my business. Okay, 3 key learnings. Yesterday, I sat through the whole day. As you know, I sat in the front row. There were 3 key things that I took away that I wanted to bring up. One person says, there is no lobbyist for the future. I would push back hard and say Wall Street is the lobbyist for the future. The financial theory starts with the assumption you must ignore sunk cost. Whatever dollar you invested yesterday, today, if you hold a stock that you bought, you decided to buy it again. So we only think about the future. When people say, this happened in 1999, or this happened even 2 years ago, pre-Gen AI, I'm like, la, 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 I'm not listening to you. We only think about from today forward because we're allocating capital to what works best. Secondly, Wall Street, somebody said, Wall Street protects investors, government, capital G, protects society. I like that. I think that's very complimentary. I think that our focus is owners. How many people here have any money in public equity markets through your pension fund, through active managers? Okay, I would guess everybody in this room, okay, let me go with 80%, are owners. We own our houses, we own our cars, we may have leverage, we own, public equities, public debt. We own things. Earners are the kids in their 20s and 30s who are trying to build wealth. So I think it's a really complementary focus. I think government a lot of times focus on earners. Wall Street focuses on owners at big asset classes. Government focuses on trade-offs. One of the things I was really struck by yesterday is everybody's talking about trade-offs, weighted by your values. What do you value? And then we're going to make trade-offs. Wall Street doesn't do any of that. Wall Street is economics, return on invested capital, cold hard cash, and we move forward fast. I would say that the average EQ, which is an emotional intelligence, is about 1/3 on Wall Street than it is in government. Like, nobody has any EQ. They sit in screens and they invest money. And if they're really smart, they invest money differently than everyone else and they make more money. And so they keep their job. The third thing somebody said that I thought was really impactful to me in my frameworks, in my cult, is EU regulates, US litigates. I like that because what it says is the US is based on the past, and it's complementary to our Wall Street because we only focus on the future. We're funding the future. The capitalist vision is I fund a lunatic like Elon Musk or Mark Zuckerberg or the boys at Google, and we run forward. And then something bad happens. And then you invent CrowdStrike, and we fund it. Or we invent cybersecurity protections, and we fund it. So as outcomes different, there's a huge market opportunity to close that loop of bad actors. But we rush forward all the time, creating things along the way to fix things that are broken, because there's market opportunities to do that. What that means to me, this is one of my takeaways, the Gen AI, US is going to bury the EU because of Gen AI. Because they're going to try to regulate ideas. I don't know how many here people in this room remember the long tail? Do you remember the long tail? Was it the internet was going to allow all these creators to not have a gatekeeper like their music label? And it did the opposite. Taylor Swift is now like 98% of the record business's economics. So if you're the EU and you were regulating on the long tail thesis, which is a really compelling idea, that I would say Wall Street was really torn on 50-50, if you regulated on that basis, you actually regulated exactly the wrong way because it didn't turn out to be true. So I like the way the US does it. Run forward, find the outcomes that are bad, either litigate them in the courts, litigate them in the courts, or just invent another thing that fixes them, closes that loophole, makes more value. In the end of the day, being a numbers girl, the US is 4% of the world's population and 25% of global GDP. The EU is 6% of the population, and round numbers, 12% of the global GDP. So they're twice as productive as their population. We are 5 times as productive, really 6. Point on. So I think our system works. Regulating outcomes, I think, works. Let us run forward, think about the future. Let us invent things. And when things go horribly wrong, get involved. I think that's fine. I think it's working for us. So if it's not, we have a saying in business, if it's not broken, don't fix it. I say don't fix it. Okay, big tech. Let's talk about, we're going to get into our case study here. So this is the big tech and media tech landscape today. I write research. I'm an equity analyst, so I write research on almost all these big bubbles, not Microsoft, but almost all the rest. And you can see this is the size of the bubble is their market cap. So Apple's, in this was 3.2 trillion, today's is 3.5 trillion. Alphabet and Amazon, round numbers are 2 trillion, and Meta is the baby, 1.3 trillion. I don't cover Microsoft, so, okay. So media is being redefined. So one of the things that's really important to know is that the S&P 500 is up 17% year to date. The S&P 493 is up 8%, which means 7 stocks are pulling the entire 500 index up 11 points. By the way, I can't share the slides. My lawyers won't let me. I cannot prevent you from taking a picture of the slides, so go ahead. Okay, so the point is that media is defined as ad-driven, basically. That's how I would define media as a longtime media analyst. If there's advertising in your ecosystem, I call you media. But notice, not only is the market cap distinction quite different because the returns on capital are so much higher for the big guys, that it's actually not their core business. The left, Charter, Comcast, Fox, Paramount, all of these companies I've covered for 30 years, that is their core business. Guess what? The new winners with better returns on capital, it is not the media, like when you think about film or television or content creation, it's not Microsoft's core business. It's not Amazon's core business. It's not Apple's core business. So these are add-ons that drive engagement with their traffic, blah, blah, blah. It means their strategic decisions are completely different than the old media universe. Wall Street doesn't care. No values. We don't weight it by values, like better, worse, what happens to society. No, no, no. We give you $1. Do you give us back $2? Do you give us back $1.50? We're going for the $2 guy. Media, this is really important. This is a really important slide. Basically, TV broadcasters are doomed. Okay, that's the bottom line of this slide. Because what it says is, one of the big revolutions that the internet enabled was global scale for media. So Netflix did it first. It buys rights globally. It distributes all its content globally. Guess what happens if you're getting 10 cents from Germany, 7 cents from Nigeria, and 12 cents from, I can't say China, Japan? You don't need to make as much margin in America. So guess what happens to your pricing in America? It goes down. If you only are Comcast, which has a regional footprint, or a TV broadcaster that has a local footprint, or even DirecTV, which has a national footprint, you have to get all your profits from one region. But if you're a streamer, you can get 5 cents of your profits from other countries, and so you can lower the amount of profit you require from America, puts everybody else out of business. So my opinion, local media is and you see it with capital flows. I mean, Wall Street sort of has a consensus view. When you look at how these companies trade, they're telling you that non-globally scaled media is doomed because they need too much profits from their tiny little total addressable market, which we call TAM in my business. Social, all these winners, YouTube, TikTok, Twitch, Instagram, you know what they have in common? Globally scaled businesses. And low capital intensity too, so that's even better. But the revenue streams here are the winners, globally scaled. They get money from all regions. So the other thing that no one talks about here, which I find shocking, essentially, remember how Hollywood used to export US culture? Guess what big tech does? It has algorithms that prioritize what people see around the world. Seems to me like that's exporting American values and culture. Seems good to me, but I don't know, nobody talks about this in this room. I think it's great. Okay, I don't really care about this other slide. Let's go to the next slide. Okay, let's talk about Gen AI. So this conference sort of turned into a Gen AI conference, and I love it, but I want to give you Wall Street's point of view about Gen AI. So Wall Street only looks forward. We talked about that. Major technology shifts occur every 10 to 15 years. So I'm going to tell you, in the bell curve of belief, the 70%, you know, how many people here know what a bell curve is? So I don't have to explain it. Everybody, thank God. Okay, everybody took Ec 101. Thank you, God, the Lord. Okay, so my daughter wouldn't. She's a Harvard lawyer, wouldn't take Ec 101. Like, what an idiot. Moving on. Bad parenting, or she's an idiot. I go with she's an idiot, not bad parenting. But anyway, so the point is that of the bell curve, 70% sit within one standard deviation of the high point of the fat point of the curve. Okay, this is what Wall Street believes, that there have been 4 technological revolutions. I do not think we think Gen AI is a continuation of AI. Somebody said that on stage. I violently disagree. Moving on. The PC was the first one. Who won? Microsoft. We went from IBM mainframes that filled up a room as this big to PCs, one winner, Microsoft. Number 2, the web came along. New winners, not Microsoft. Let's call it Meta and Google. I don't know where to put Amazon, so I'll put them in there too, but brand new. Clean piece of paper, no installed base, no set of assumptions, 2 winners, maybe 3. Mobile, 1 winner, Apple. Apple won. Notice it wasn't the prior winners. Gen AI, none of big tech will win. Everybody in Wall Street thinks, everybody in government thinks big tech's gonna win. No. Because big tech, how many people here familiar with Clay Christensen and disruption theory? Okay, not that many people. Okay. It comes out of Harvard Business School, and he's one of the foremost influencers on how business think. Part of our Bible, part of our cult. People buy in my cult to this disruption theory. What it says is, and it has been true so far in these other revolutions that created the winner, is that the installed base of how your tech works, and coupled with the fact that the guys who run the companies that won before started with a set of assumptions of the old technology, cannot win the new one. That the kid that drops out of Harvard with no constraints on what he can do with the new technology, he wins. And he's the guy, and I think the Gen AI winner will be a $6 trillion company, twice the size of Apple, and it will be globally scaled. So while government's upset because big tech is $3 trillion, $2 trillion, $1.5 trillion, just wait till they get the Gen AI winner. Oh my God, they're gonna be horrified. Like this big is bad thing, I don't think anyone knows what big is until we get a Gen AI winner. But I bet it hasn't been invented. Because right now they're still doing the backbone, right? They're laying the data fibers. Some kid's gotta drop out of Harvard and create a killer use case on the back of one of those cloud things. Probably won't happen for 5 years. And then it takes 3 years to adopt, or 5 years or 10, whatever. But it will be so it's a 10-year frame. And we will race ahead. We are funding, well, Mark gave the number the other day, the CEO, $250 billion a year. Wall Street is funding that. And somebody said on stage, he said Wall Street's ahead of its skis. Somebody else said they're too highly valued. You know why Apple has gone from 2 times revenue to 6 times revenue? Because some people think that the valuations of Google, of the Gen AI guys, right? The Microsoft OpenAI, the Amazon Cloud, and Google, some people disagree. And they're like, fine, we're gonna buy Apple because Apple says, we don't believe in Gen AI. We're gonna take our $90 billion a year and we're gonna buy in shares. We have no better use of capital. So they have taken the opposite point of view. And so people who don't like Gen AI, they're like, fine, we agree. We think these other Gen AI plays are overvalued. Meanwhile, NVIDIA is up 3x this year. It's 8 months into the year, right? So there's more people on the side that Gen AI is gonna disrupt everything. Why? Because they're the guys managing money when the internet disrupted everything, and when the PC disrupted everything, and when Apple came along and disrupted the mobile ecosystem. That's who runs the most money in this country, is the guys who got the prior revolutions correct. Those guys are who are buying Gen AI. They're like, we've seen this before, because it's only every 15 years. If you have a 30-year career, you've seen 2 of these as a money manager, as a big money manager. So disagreement, but there's places to invest on both sides. Okay, so what happens next? Gen AI mooners, not in the public market. Like I said, we're still building infrastructure backbone. And I think we will be for 3 years. Like it's $250 billion a year. I think we'll put $1 trillion in. I don't disagree with Mark's number on that. And by the way, okay, so we already did this. This is the valuation. Oh, there's Microsoft's $3 trillion. So somebody was talking about, this is CoreWeave. Does anyone know this name? I don't even know this. I don't cover this company. Okay, moving on. Anyway, this is a company that does Gen AI. It's in the private market, so it's not on Wall Street. But they did, it's 2 years old. They did $10 million in their first year of operations. They did $1 billion in their second year of operation, and they've raised $12 billion to date. Most recent round had Fidelity, had BlackRock, had, this is a set of private market investors. They will come public. My guess is their revenue won't hit the 100 million mark, but they will come public at like a $20 billion valuation, like a NVIDIA kind of idea. I don't know what they do. But the point is, that's the kind of numbers we're talking about with Gen AI. That's how big Wall Street thinks it's gonna be. And by the way, if you miss the Gen AI plays, whether or not Gen AI turns out to be a thing, you get fired in the second year. If you miss NVIDIA this year, you are now on probation. And if you miss next year's NVIDIA equivalent, if this company comes public and you miss it, you're out of a job. You don't get to stay. So we fire people. We are performance-oriented. We all have benchmarks. If you don't make money for your firm for 2 years, you're out. We fire, no apologies. That's just the rule of the game going in. So lots of turnover in my world. So my prediction is that because we rush forward and we're going to fund these, and we have this sort of ecosystem of, we know 9 are going to go out of business, but 1's going to work, that I think in 10 years, oh, by the way, half my companies, sorry, that's true, half my companies are using Gen AI today to cut costs. And they tell me, Laura, where I find a use for Gen AI, so you're seeing their revenues be normal, up 7%, up 10%, but their costs are falling. Oh my goodness, guess what happens? As more and more companies do that, it becomes table stakes. Their competitors who don't do that, Wall Street pulls money out of those, gives it to the guys that are using Gen AI to lower costs and or accelerate new product introductions, because the first draft of code is all being written by Gen AI now. If you're smart, then no engineer should be writing code from scratch. He should put in a prompt to say, I want to write a new code that does this, this, and this in my new product, go, and then he should edit the code, because Gen AI is really good at that. In Python, you can tell it what language you want to make it in. The point is that all of those, the winners in 10 years will have 30% lower costs. Okay, let's say not every segment can benefit. 15% lower costs than they do today, and their revenue will be higher because they'll be faster at product iteration. EU's like, oh, we're just going to regulate this, can't do it. Guess what? We're going to take our little companies and we're going to go to the EU, and the only way to stop us is protectionism, which is the rise in nationalism. So I think that's where we end up. So that's, I think, the bad outcome, but otherwise we eat their lunch because we're going to fund these cost-saving, revenue-enhancing Gen AI companies that aren't yet public. Okay, so this is my summary, and then I'm going to take questions. Okay, Wall Street consensus view. There's information inherent in stock price. If you watch Wall Street, if you watch Apple go from 2 times revenue to 6, and it's not doing Gen AI, I mean, it says it is, but I call shenanigans. It's not. And then you look at the stock goes down when Amazon says it wants to up its CapEx on Gen AI by 10 billion, and Google goes down for the same reason. You're like, okay, well, Wall Street doesn't like that. So stock price moves have value. I don't think government cares, but I would say it's interesting signals. Money follows consumer time. This is something we absolutely believe. If consumers spending time on TikTok, we think it's just a question of time before ad dollars, subscription dollars, e-commerce dollars follow. We believe that consumer time spent is a lead indicator to money. So we bid up their equities. TikTok's private, so it's not on Wall Street. But if it came on Wall Street, we would use time spent as a lead indicator. Global revenue business models accept lower margins than country-specific competitors, puts local media out of business. Data is the new black. We're all into numbers and data, and size begets size. That's true. Competition risk, big techs. Oh, by the way, big techs getting into each other's business. Their businesses, they've sort of matured out in their own core business, so everybody's going into search, right? How many people here start a product search on Amazon and they don't go to Google anymore, right? So it's taken, I mean, Amazon is now going to be, I think this year our estimate is $41 billion in advertising. 100% of that is, I mean, a lot of that is sales, but a lot of it's product searches that should have been Google's. The rise of UGC in video games is something we don't talk about a lot. UGC is user-generated content like YouTube and Facebook and Instagram. And you know, if you have any kids under 25 and they're a boy, they spend a lot of their life on video games. You know, people just ignore that. We shouldn't ignore it if money follows consumer time spent. Influencers, YouTube, Instagram, TikTok, social video, sort of changing the world, especially for under 25-year-olds. I think they're important. They're all competitive, I think, in the media business. Gen AI may disrupt everything, everywhere, all at once. I think Wall Street, the 70% in the bell curve, believes this. Gen AI shift of value from software to hardware. This is an interesting point I made the other night when I was asking Mark questions. The internet was a free rider thing, right? Facebook and Google built businesses with sort of no infrastructure costs. They just had to, which is not true, they had to build their own infrastructure, but then it rode on the internet. That is not happening now. These companies, these big tech companies, will take money from Wall Street and put in data centers that are $100 billion assets each. So that is a barrier to entry that we didn't have with the web. But it won't make the killer app. It will be the backbone that, and it will accept a tithe. It will take 10% of any money, just like you know how Apple takes 30% of everything. It will sit in the background as the tech, as the dumb tech background LLM, large language model, and some kid will drop out of Harvard and create a killer use case that none of us think we need today, and it will be amazing. Big tech will not be winners, that's my opinion. I would say it's a consensus view, actually. Assumption government is always late. Oh, this is an assumption. The fact that the government is suing Google means it's over. means it's losing. It means that Gen AI search is going to replace its old business. We really believe that the government is always late, and therefore, if the government is caught up and is suing somebody, it's over. It was over a year ago or 2 years ago. I mean, so that's sort of amusing. Relentless march of technology replaces people. I think this is an important point we have. My opinion is that the EU protects current employees, and Wall Street protects future employees. We're like, look, we're going to put 30% of you out of a job. We expect you to retrain. We expect you to do something different. We expect you to adjust. But we're going to end up with 6 times as much productivity as this next closest region. That's what we promise your kids and the whole rising tide things. So we believe that. We're willing to sacrifice current employment for more interesting jobs and more GDP and wealth later, 10 years from now, 5 years from now. Does it change everything? Adds risks. I will take questions, I think. I think that's my last slide, right? Yeah, okay. Questions, questions. Thanks. Who has a question for me? Yes, ma'am. Shane.
Why do you think big tech is not going to be the winner? What's your thought process?
Because they have installed base of technology that won't be relevant going forward, and the people, they're too slow. This Gen AI stuff has got so much capability and I think they're really focused on infrastructure. And it's really hard for software and hardware guys to talk or I mean, I think they'll have the backbone. They'll be one of 3 competitors that have backbone, and kids will, but the kid who's 21 has a completely different view of what screens mean than you and I. Like, you and I want to look at each other and talk to each other. They do not. They live their life on screens. They're going to start with that assumption and create things with Gen AI that are more screen-based, more virtual, and they do not see a difference between digital world and physical world. It is their world. So they're going to create things that wouldn't occur to us, and because we're too old. We were in the physical world with real people too long. That's my opinion. What else? Yes, sir. Scotty, or, yeah.
So you talked a little bit, or a lot, about what Washington doesn't understand about Wall Street. What about the other way around? What does Wall Street not get about Washington in a way that affects their businesses?
We really don't understand the lack of forward momentum. We get frustrated by the words. A lot of lawyers get paid on words. Lawyers get paid on time spent. Literally at the end of every day, I put what you guys said into ChatGPT and I asked for the 10 key takeaways because I can handle 10 bullet points. Like, we are super ADHD. We are excellent at prioritization. We are excellent at bullet point thinking. We are concise and we are very performance oriented. And you guys don't have that luxury because you're trading off values all the time and you're trading off favors and trades and people. So like I said, cult, I don't think a cult just automatically can understand another cult. It doesn't even start in the same place. So that's what I would say. And I think a lot of people in Wall Street do not spend any time in DC because it's so hard. It's really hard. That's what I'd say. What else?
How does China factor into it?
I think China not. I think we have this growing sense of nationalism because as we become more competitive, other people have to protect their markets and their economic system. I mean, I agree with Foucault, the famous French philosopher who said the system will fight to survive and the system will work together. He tried to do prison reform in France, and the hospitals wouldn't allow it because they were going to get less gunshot victims, and the police wouldn't allow it because a lot of their jobs depended on arresting criminals. So, I mean, the system fights to survive and it interlocks arms. So I think that means we have growing nationalism, I mean, EU being a nation in my view. So China, I think we increasingly become more self-reliant, and I don't think Wall Street thinks about China. I think you guys do. I don't think Wall Street does. We are funding the future. We do not think about China.
Protectionism is the outgrowth
Yep.
you just described. That will reduce the degree to which these companies can count on global distribution to lower their prices at home. Are those
Yep.
trends going to collide?
Maybe, but what we'll do is fund them and they'll run forward, and then the EU has to take action to, like Digital Markets Act, it has to top it down to protect its sort of antiquated, failed economic system. Well, I don't know about the culture. Culture's sort of cool, but the economic system has failed, my opinion. But, you know, they don't just cave. They're not like, oh, we're all wrong. We're going to be a capitalist system. That isn't going to happen. So they just have less people. Yes, over here I saw one. Oh, boy. I want to do the girl first, though. I'm coming back to you two men. I do want to do the girl first. Go.
I just had a quick question. How do you feel about government investing in infrastructure, technology?
Like chips?
Chips, broadband, anything like that, yeah.
Look, I think the biggest risk of global war, that's not true. I think the biggest risk that we go to war with China is they attack Taiwan, because we have to have chips. It is, like, I don't think we'd go into Iraq anymore or Kuwait to protect them. We don't need oil anymore. We can figure it out. But I do think we would have to protect Taiwan because we can't live without chips. So I think it's smart, but it takes 10 years to build these chip factories, and it's actually not necessarily successful, so we'll see. So industrial policy, I think is a good idea. I don't mind. I mean, I'd rather have them using taxpayer money to do that, because you can't control that China doesn't invade Taiwan. So if chips are part of your lifeblood, you should be self-sufficient. That just seems intuitive to me. Yes, sir, 2 men. 1, 2, go.
Hi, thank you. Your point about the big tech companies and AI, I guess the one other counter argument there is that developing new large language models costs $100 billion. So who's going to put up that money for startups? Is it really going to be a startup-driven process, or is it going to be a big tech company-driven process that startups just build on top of, but most of the value is actually in the big tech companies?
So the answer is this. We, Wall Street, are funding the $100 billion that Amazon is spending, that Google is spending, that like Microsoft is giving to OpenAI and the Llama, the Meta. We're funding that infrastructure right now. Fine. Now they get there. Now they have infrastructure, which is hardware. Okay, that has nothing to do with use cases. They're going to tithe. Like I said, they're going to take their 10%, just like Apple. Like Apple's a hardware platform, says you want to make money on my platform, we're going to take 30%. They're going to take 10. 5 to 10, because they're going to compete. Fine. There's 3 of them. That isn't where the money is. The money is the kid that drops out of Harvard and creates an app, the equivalent of, let's call it Instagram. He creates, on the back of that hardware, he creates the low capital intensity app, and that is the thing that works on Wall Street that you must be in. You must not miss the kid that creates the low capital intensity app that rides on the back of the infrastructure. That's my opinion on that. Yes?
So, Laura, you painted a
Hi, Ben.
You painted a pretty gloomy picture of so-called legacy media. Is there anything that legacy media can do to thrive again, especially in a regulatory environment where M&A is very difficult?
Like, I think one of the points I'd make, Ben, it's not just legacy media. My opinion is you cannot get, it is harder every single month to get capital allocated to you if you do not have a Gen AI play. Let me say it that way. It's not just, media is tiny, it's 3% of the S&P. Energy, healthcare, biotech, all these things are competing, right? The guy gets fired if he doesn't beat the benchmark. Would he rather put $1 in the thing that's going to 0 or the thing that's NVIDIA that's up 3x? Disney's not gonna hurt him. Disney's not gonna outperform like that and get him fired. But if he misses the one that wins that year in Gen AI, he loses his job. So there's this notion right now that you must be invested in the things that might double, and nothing in the old world is going to double on you, or it's going to be hard to, I mean, I guess technically NVIDIA was the old world, but not really. It had a foot in both. So it's not just media. It's that a money manager wants to hold on to his job, and the market is staying narrow. So there's 7 stocks, 10 stocks, 12 stocks out of 500 that you must be in to hold on to your job. So so capital is coming out of everything else and going into these potential Gen AI bets. Today, it's only hardware. It's the only way you can invest. But the fun thing is when the hardware is done, all the apps that come from Stanford kids and that are 21, that see the world in a different way, and they start with a clean piece of paper, riding on the backbone of AWS or Google Cloud, Gemini. Anyway, I think it's very exciting, but Wall Street's not emotional. If we put Disney out of business, oh well. 100-year-old company, we don't care what Walt would do. Sorry, no EQ in my business. Doesn't get you anywhere. Go.
Yeah, high-level questions. You mentioned China, Europe, the U.S. Your thoughts in the future? Are there any other regions that you think will be ascendant or interesting to watch?
Regions of the world?
The world, right?
Nope, I do not. I think I was having this debate last night with somebody. What we do better than anybody is manage risk. We are good at risk. Like, who would fund Elon Musk? So I had a person last night at dinner, last night tell me, no one person should have the power to influence the economy. I said, so you wouldn't fund Elon Musk then, or Mark Zuckerberg? Or, I mean, I can give you lists, Steve Jobs, of one guy that affected the world. She wouldn't fund that. Wall Street looks at risks. Okay, the guy's a lunatic, but he created Tesla, disrupted autos. Now he's created SpaceX disrupted the science, science and, that's what Wall Street does. It says, he's a lunatic. Can I make money with him? Yes, go give him money to do the next thing, to destroy $40 billion at Twitter, which is, my opinion, what he's done. But the point is, I think we're good at managing risk better than anyone else on earth.
And you mentioned Gen AI as like the next trends. Do you see anything in like space or crypto or other areas that might be big winners in the future?
Good question. So the way Wall Street works is we have specialists. I write research on 20% of the S&P, which is media and big tech. The minute there's other really big sectors. Energy is a big sector I know nothing about. Healthcare is a big sector. There are people exactly like me that know as much about their sectors as I do. It's just you're beyond the edge of my excellence the minute you leave big tech and media. It's just a big part of the S&P. What else? Yes, go.
So there have been numerous instances when you think about sort of Wall Street looking forward and Wall Street managing investor risk, and this is the thing I had said, right? And big government isn't managing societal risk, right? But how are you thinking about Wall Street's ability to continue to push capital to continue to function based on the backbone of a functional democracy and a functional government and rule of law and stability? Because we've seen in instances where Wall Street was crashing, the government come in and really help shore up the markets, help shore up public companies. We saw this in 2008. We saw it during the Watergate scandal. We saw it during COVID. And so what is the symbiosis that you see there around Wall Street needing to acknowledge that in order for it to exist, a stable country also needs to exist underneath it, if at all?
I think our cult believes in black swan events. I would call everything you just mentioned a black swan event, and then we need help. But we don't view it as a flaw in the system. We don't say, oh, therefore we're changing our ways. Right? So, I don't think we like the fact that government can't get anything done. We like the fact that you guys are so value-oriented and no one agrees, that really less is more, because we don't like uncertainty. So if we think if the federal government is gridlocked and nothing's gonna pass, we're like, great, running forward. So when people up here tell me that we're gonna regulate Gen AI, I'm like, yeah, and we're putting $250 billion in a year. Good luck catching up. Because by the time you pass something and try to execute something, we're 3 years from now. Like, we've got the backbone built, and kids are starting to drop out of Harvard and Stanford to create their billion-dollar experience. And you're gonna be regulating what happened a year ago, because it's like writing a book. It comes out 2 years later. Blogs come out real time. So, not threatened. And I actually think this is the best question I ended the conference with, which is, how is government relevant? If technology is acceleratingly changing the world, then how is government keep up, period, full stop? And how is, therefore, if it can't keep up, then how is it relevant? I don't know. Good question. I'm out of time. Thank you very much. Thank you.
Thank you, Laura. Awesome, as always. Okay, one more panel. This topic has been, I think, part of every question that we've talked about. How do you balance free speech, economic growth, and national security? So, panelists, come on up and bring us home.